Welcome to the Jay Martin Show. My name is Jay Martin, and my guest today is the President and CEO of Osisko Gold Royalties, Sandeep Singh, who always provides me with a very unique perspective on the supply and demand economics within the gold sector. So I'm excited to chat with Sandeep today. I know you're going to enjoy this. Here it is. Okay, welcome back. I'm here with Sandeep Singh, the President and CEO of Osisko Gold Royalties. Sandeep, thanks so much for coming back on the program.
Yeah, always good to be with you, Jay.
So I want to chat about a bunch of things today. Obviously, I want to cover Q1 results at Osisko. Some amazing highlights came out, right? Close to 60 million in revenue with a whopping 93% cash margin. Healthy cash balance in the company. You guys have paid down some debt. Lots of things I want to cover there before we get into an update with the company and on a handful of your assets that I want to cover today. Let's start with just a state of the industry on the gold market, Sandeep. What are you paying attention to? How are you feeling sentiment-wise on the gold sector right now?
Yeah, that's probably the right place to start. I'd say overall, good. It's funny that just a couple of months ago we were at an industry conference and no one could think of anything positive to say about gold, and the pendulum's kind of swung pretty quickly. But overall, I'd say that the inflation picture that's obviously global is still very much cemented in the mining sector. You've seen that with respect to all the guidance numbers that came out from the operating group earlier in the year. You see that with respect to the early Q1 numbers that are coming out in terms of all-in costs. So that story is still playing out in the mining sector, which obviously we are immune to in most respects as a royalty company. We don't have those costs. And we're thankful that our partners are still very, very strong, low-cost mines. So we're really not seeing that impact. We're just seeing the benefit of it. And the benefit of it is playing out in terms of, the gold price that's strengthening. And then behind that, all the macro factors, be it rates having peaked or nearly peaked, whether there's another small blip or two to come in May and thereafter. Essentially, I think everyone believes we're at the top of that picture. And you're already starting to see the cracks in the financial systems that have come from that severe tightening. So at the very least, I would argue that that's going to lead to less credit in the market, in the sector, globally, frankly. And as that happens, that mild recession, quote unquote mild, that the Fed is forecasting, I think has the potential to be quite a bit more severe and quite a bit longer. So again, all that US dollar weakness will be positive for gold. I believe it already has been. And I think overall, all those headwinds that we felt in 2022 are either already or will be turning into tailwinds. So good backdrop. Kind of feels like where we were in 2009, kind of a year of tightening later is when the impact started to be felt. And then we went on a move, which you'd remember, from about $900 an ounce to double that, $1,800 an ounce over the course of 2019 to basically 2012. So we don't need that to be successful. We're a very successful company today, but I do feel like the backdrop is in our favor from a gold price perspective. And then obviously in a stagflationary environment, our no cost ounces do well.
That's right. And yeah, I mean, it doesn't hurt to get that tailwind, right? Osisko is a profitable company regardless, but rising gold price helps everybody. When you see mainstream media start to talk about these subjects that you just discussed, right? You kind of hinted at de-dollarization or just a weakening in the US dollar. The gold narrative is catching sentiment outside of our gold niche industry. And, do you put much weight on that, Sandeep, when you see platforms like Fox News and CNN suddenly talking about the gold industry, which they obviously haven't done for 15 years?
Yeah, look, it's better than the reverse, I would say, but it doesn't change our lives. Like you said, we're highly profitable. We manage, the part of the cycle we're in. Sometimes people are bullish gold and we benefit. Sometimes they're bearish gold and we tend to put more money to work in terms of new deal flow. So, obviously prefer the gold price being higher, but we don't need it. I think what I would argue is, or what I suggest is, we still haven't seen the investment dollars follow that positivity. I think we're seeing the early innings of that, whether you track the ETF inflows or generally speaking, the lack thereof, absent a little blip. I think it was in March. We really haven't seen those dollars follow that positive narrative. I think that's something that's coming, whether that needs us to be on the other side of those rate hikes in a softening US dollar environment. Time will tell, but I do think there's a lot more positivity. We feel, for us, as an example, we see people starting to kind of come back to the name that haven't been in it for a while. They're doing their work. We're talking to more and more generalists that seem to be doing real work. So I think we're in the early innings of that wave, but feel like it's ahead of us still.
I agree with you. Okay, now let's jump into the company story a little bit. Long-term viewers know I'm a fan of Osisko for a handful of reasons. Not just that you have the single best royalty agreement in the business, being on the Malartic, and we'll cover that, but super high margin, low cost. You're insulated from the inflationary pressures that a lot of our favorite gold producers are subject to. So it's a great place to have a cornerstone of your portfolio if you want to be a gold investor and speculate in the high risk stuff like I do. That's awesome, but go in from a place of confidence and strength with some pillar positions like Osisko. So jumping into Q1, you just put out your results a few weeks ago. Highlights, Sandeep. What strikes you that you want to share today?
Yeah, so we put out our high level highlights for the quarter. I guess our ounces or GEOs that were earned by our partners, or that we earned from our partners. Revenues, cash margins. We'll put out our actual Q1. I think it's on May 10th.
Okay.
So those numbers will follow. But when we put out those numbers, that kind of tells you most of what you need to know for us, given that we don't have the cost side of the same type of cost side of our business. So another really strong quarter. We ended last year with 3 record consecutive quarters on everything. So the business continues to strengthen. Slight dip in GEOs in Q1, but that was expected. Seasonally, we always see a bit of weakness in Q1. We saw that across the sector, and there's one of our core assets that just doesn't hit its stride until Q2. That's a winter effect. But one thing I would say is overall, we really hit our growth stride. If you look back to when we started talking, Jay, we were at 80,000 ounces, kind of stuck there for a little while, delivered to us. Then it went up to 90 last year. This year, we're guiding to a midpoint of 100. So we're kind of in our sustained period of growth, and we think we have the assets. We know we have the assets to continue that level of serious kind of high single-digit, low double-digit growth for a long time off the things that we already own. So that really is what's driving the company. This will be another record year in terms of ounces, and so far it looks like revenues based on where the gold prices has been averaging thus far. So our partners are doing a great job for us, and we're seeing the benefits of it.
And when you think through your vision since taking over the helm as president and CEO, shortly before, I had you on the show for the first time, and this has been 2020? Would that have been the year?
So I came in January 2020, yeah. So
that's right.
When we first started talking. It feels like longer, but somehow feels like shorter and longer ago.
Yeah, no doubt. Well, reflect back on your vision at that moment compared to today. Like when you think back in the last 3 years, it's been a volatile gold market. Osisko's done well, though. What are you most proud of, Sandeep?
Yeah, look, it's a good question, and I'd say we always knew we had a world-class portfolio. It just wasn't trading where it belonged. And so job one was to make sure that we unlocked that value, because that was the best thing we could do in terms of creating shareholder value. So that's where our focus has been, is making sure we position the company in a way that it's going to be well received. We did that through the spin out of the development assets and the royalty business. We've continued to create separation between the two, ultimately leading in the deconsolidation of our financials in Q3. That was another kind of big step in terms of the simplification of the business. So I think, with the growth phase that's kicked in that I just talked about, the fact that we've been able to add to it smartly in a very kind of competitive environment for new royalties and streams, I think has been to our benefit. The fact that we've continued that simplification of the business, and then underlying all that, our partners are just doing tremendous work. You touched on Malartic. It's not just Malartic, but the fact that our flagship asset is now 100% owned by Agnico. And every time they talk about it, the story is strengthening. All that taken as a whole has led to kind of some of the success that we're starting to see. But I still think that we have a lot of value to unlock in our existing portfolio. Ultimately, when you ask about the vision, I think we have the ability to become, a senior company, a senior royalty company based on what we already have and what's unfolding in front of us. And with a few smart moves along the way, I think we can be a much bigger company based on what we already have. That's not the intent. The intent is not to be the biggest. It's just to be more and more profitable and unlock value. But I think we have all the pieces to do that.
Well, let's touch on some of those growth potential bullet points then. And let's start with the Malartic. So 100% owned now by Agnico. What can you tell me about the untapped potential of this mine right now?
Yeah, and look, I can't underscore this enough. I mean, every time I hear them talk about it, the story is strengthening. I think this is going to be a huge year in terms of those catalysts. So what are they? First and foremost, they're still an extension story. They've only used half of the current ounces, half of the 15 million ounces in all categories to push the mine life out until 2039. They've been clear that as they infill drill, more of those will come into a mine plan. That alone is a pretty major catalyst. They're still drilling and finding more at depth. Those will come into the picture as well, which is good news. What starts to kind of unfold in front of our eyes, I think, is the potential for an additional shaft and getting those ounces out of the ground faster. Because at some point, you're just pushing out ounces multiple decades. And Agnico's been talking about that. So was Yamana before that. But I think this could be a year where more meat gets put on that bone. And if those ounces come out of the ground faster, put through a mill that will have 2/3 of excess capacity towards the end of this decade, that's a pretty meaningful event for us. I'd argue that's a bit of a game changer for the asset. So those two things are unfolding in front of us. And then, Agnico's been talking about the regional potential of filling that mill with even other, further sources along the Abitibi, some of which we don't have royalties on. So we would get the mill royalty. I remind you and your viewers that we have 40 cents per ton mill royalty on anything that goes through that mill that isn't Malartic. But there are other potential conceptual sources like Upper Beaver that are on the rail line. And we also have a 2% NSR on that. So, again, there's almost too much upside, but whether it's the infill drilling, whether it's the extensional drilling, whether it's the potential for another shaft and getting those ounces out faster, and then the regional synergies of having that mill and under 100% Agnico ownership. All those benefit Agnico, they all benefit us significantly as well.
Okay. Thank you for that, Sandeep.
And I guess maybe the last thing I would say is I think this is a year where, as they've just unitized it, I think they're going to spend the money it takes to unlock that picture and see what it looks like.
Got it. Okay. I want to jump into your development portfolio and give our viewers an opportunity to look at what's in the pipeline, what you're most excited about, and therefore potentially what they could expect in terms of news flow over the next, call it 12 months.
Sure. And I just want to touch on something maybe you said earlier. And you talked about having some core positions in your portfolio and then chasing maybe some more torque through earlier stage names. And I kind of construct my own portfolio the same way. In a lot of ways, I think, and you should do that, but in a lot of ways, I think we do that for investors as well. We've got those producing royalties like Malartic and Mantos and others, but we've also gone out and kind of curated a list of pretty interesting development stories, that we've done the diligence work for technically and vouched for. We put our own money to work, and now those assets are coming forward, and frankly, our investors get the top line revenue, so they get the safest revenue from those deposits. So in a lot of ways, I think we've constructed a bit of that for people, and maybe that's one of the reasons you look at a royalty company like Osisko. More specifically to your question, there's a lot of good things happening. There's a lot of positive catalysts. There always are. We have a very deep portfolio. When I think about what's right in front of us this year, there's the FID point, the construction decision basically for Hermosa. That's the South 32 asset in Arizona. They're spending $250 million US ahead of FID. So all signs point to yes. But it'll be nice to get that tick mark and advancement on that asset. That's a good chunk of geos for us right around the corner in terms of decision point, at least. Okay. Windfall would be another important catalyst this year. Obviously that's in our sister company. That's a flagship, multi-million ounces of high grade in Quebec. Also kind of coming to an inflection point in its trajectory. So that's good news. Going through the permitting process there, working towards financing alternatives and strategic alternatives. That's good news. So those are just two examples of what's in front of us in that development pipeline in terms of real decisions kind of coming to the forefront here. If I fast forward maybe to the back end of the portfolio a little bit, some of the things that are chunkier that don't exactly have visibility to timeline. In that part of the portfolio, I'd highlight things like Casino, which is held by Western Copper. We've always been very bullish on that copper gold porphyry. It's a huge project. And one of the few things that's been lacking has been the financial capacity, or groups with the financial capacity to build it. And in the last 12 to 18 months, we've seen Rio Tinto come in and take an 8% investment in the company. In the last few weeks, we saw Mitsubishi Materials come in and do a similar thing. So we're starting to see the outline of what a group could look like to build that asset, maybe in the fullness of time, whether it's them or groups like them. We're starting to see people come around to what is a really interesting copper gold asset. Not a lot of places to go find those in good jurisdictions. And then one last one, if you'll allow me, that shows and I think underscores the optionality of our portfolio is our royalty on Corvette, which is the asset held by Patriot Battery Metals in James Bay, Quebec. If we were having this conversation a year ago, Jay, that would have been a name on a list of 180 assets, and we would have been positive about the work that was starting there, but really no way of knowing what it was going to turn into. And today, Patriot Battery Metals probably has a $1.3 billion market cap, and we've got a 2% NSR on what looks like most of that deposit. So that was a name on a list that someone was excited about, and that excitement has turned into a real story in the right type of metals. So it shows you that whether it's Malartic on the here and now, whether it's the development pipeline over the next 3 to 5 years, or whether it's the back end of the portfolio, we are really kind of blessed for catalysts. And I think that velocity of catalysts is going to continue for us.
Yeah, I mean, I hesitate to call Corvette a lottery ticket because I know there is nothing chance about it, but amazing growth in that story year over year. So that's got to be exciting.
Yeah, look, and given that we kind of got it for free, came along in a package when we acquired a royalty in James Bay. That's kind of what you want to see in the royalty space. You want to see long life assets getting drilled and getting longer. You want to see somebody putting a hole into something perspective and rejuvenating or starting a story from scratch. And that's what we're seeing. And 2022 was, essentially the 6th year in a row where we had, 1 million meters plus drilled on our properties, or around, rounding to 1 million meters or higher over the last 6 years. That's a tremendous amount of work. And it's certainly bearing out.
No doubt. Okay, look, Sandeep, official Q1 results out on May 10th. It looks like at this point you're set up for another record year with Osisko. Anything else you want to leave my audience with today before the next time they hear from you?
Yeah, no, I think we've covered a lot of ground. I think, as I said, the portfolio is doing great. We're adding smart things to it. Really proud, actually. Maybe we can touch on this for a second, but really happy with our deal flow last year. Really happy with our deal flow, but also our discipline. So last year we were quite active, adding things like the CSA acquisition, which will be closing here in the near term. Only problem with that asset has been the timeline to closing, but that's getting to the finish line. The other things we invested in last year, be it Soul Gold, Marimaca, Tintic, almost immediately post announcements, we saw really positive developments that we were the beneficiaries of. So that piece, really happy with, and happy that we stayed disciplined. You mentioned it earlier, kind of the balance sheet. Happy that we kept our firepower dry for what looks like a better investment, timeline in front of us. Yes,
absolutely. Okay, look, Sandeep, it's always a pleasure getting you on in front of my audience, catching up with you, hearing your thoughts in the gold sector, and then getting an update on Osisko, because it's been, it was 2020, the first time you came on the show, and there was a lot of projection into projects that were set to mature in the next couple of years. And we're now watching those mature, watching Osisko spit out cash. Congratulations. That's got to feel good. And I appreciate your time. I do.
Yeah, always happy to chat with you and your viewers. And yeah, it's a good time to be kind of getting that update, because we've had a decent run, but we still have a lot of kind of positive catalysts, a lot of room to continue to appreciate. We're still trading, half the valuation of some of our larger peers. So there's a lot of hard work to go into it, but happier with the way things are going.
Good. Okay. Well, until next time, stay well. Thanks, Sandeep.
Yeah. Likewise, Jay. All the best.